Hey guys, it's the Dividend guy coming at you with another list video. Today, this definitely caught my attention. Worried about another crash, which seems like everybody's always worried about a crash no matter what type of environment we're in. So it says worried about a crash, two unstoppable stocks for new investors to buy right now. So let's take a look at the stocks that they picked. I'm pretty interested because I want to know what stocks are unstoppable. If you're new to investing and you're building your basket of stocks from the ground up, diversification and a long-term mindset are key to constructing a stable portfolio, which is true. So filling your portfolio with high-quality companies that have stood the test of time and continue to make investors richer, no matter what the market situation, is the way to accomplish your goal. If you're a new investor trying to build a winning portfolio, in the current market environment, we have two stocks that have continued to generate stable returns, and they could be a rock-solid investment that you can hold for a lifetime. So that's a pretty big statement. Stocks to hold for a lifetime. First is Johnson & Johnson. Yeah, not surprised to see that name on this list. It's grabbed the attention of many investors for the past year because the coronavirus vaccine, but the 135-year-old company has much more to offer to shareholders than any growth it might experience from a single product. In fact, the company is yet to turn a profit for its one-dose vaccine, which is developed by a subsidiary of Janssen Pharmaceuticals and has committed to continuing producing dosages for a non-profit basis for the deterioration of the pandemic. So while Johnson & Johnson may see some future balance sheet gains from its vaccine, the company's role in the coronavirus vaccine race isn't a reason to buy this stock, which is funny because a lot of people actually have been buying from what I've read and what I've seen, people I've talked to. A lot of people were excited because J&J was going to be in that vaccine lineup, and they thought that was going to be huge returns and a big profit boost or whatever to J&J, and it wasn't. When you originally, I kind of thought it was going to be too, and then when I looked at the press release, I noticed that it was a non. They weren't making any money off of it, so if you bought J&J, if you're going to simply buy J&J for a COVID vaccine and hope that it's going to be profitable, though. I mean, maybe in years to come, sure, if it's manufacturer vaccine, that's a good reason to buy it, but it shouldn't be the only reason to buy J&J. And I'm sure they give you a lot of reasons here. But, however, there are plenty of other compelling reasons for investors in all trading styles and strategies to scoop up shares of this blue chip company. It has three key business segments to generate revenue. The pharmaceutical division features a broad array of lucrative products, including blockbuster drugs like Sterla, Dizeralax, as well as other top-selling medicines like Imbruvica and Tramify. It also boasts a thriving consumer health business segment bolstered by house name brands like Neutrogena, Listerine, Aveeno, Tylenol, Benadryl, and Motrin. So those are pretty big names. And then the third source of J&J's revenue comes from its wide range of medical devices, which include everything from hip to knee replacement to surgical instruments. J&J's balance sheet suffered in the early stages of the pandemic, but it's closed in 2020 on an updated note. Fourth quarter sales grew by 8.3% year to year, and full year sales increased by 1.2%. So there was a drop in surgical procedures, and of course it did impact the medical device segment. But the consumer health and pharmaceutical segments growth grew by 3.1% and 8.4% respectively during the 12-month period. And J&J has already rebounded quickly from the pandemic headwinds. It nearly grew 8% for sales growth in the first quarter of 2021, and EPS rose by 7%. Its pharmaceutical segment sales rose 7.4%, and medical device segment raised 8.8% year over year. It raised its full-year guidance and is projecting more than 9% adjusted operational sales growth from 2021. Finally, investors should take a good look at J&J's robust dividend, which only yields a 2.5% based on the current share price. Management just announced a 5% increase to its quarterly payout on April 20th. In fact, the company has such a stellar history of increasing the dividend, nearly 60 consecutive years, that it's part of an elite group of stocks known as the Dividend Kings. J&J's pattern of gradual stable growth and robust investor returns is a form of consistent dividend increases make this stock an unbeatable buy in both bull and bear markets, which I completely agree with. I don't own J&J simply because it's so expensive, and I don't mean that it's overpriced at all. I just mean that it's an expensive stock, and I would rather own something like Pfizer, in the same space, doesn't have as stellar of a track record for dividend growth, but they operate in the same industry. They have similar product lines, and the only thing that Pfizer lacks that J&J has is really the dividend increases. They operate in pretty much the same industries, except that Pfizer doesn't have the medical devices. But I like Johnson & Johnson a lot. And honestly, to be completely honest with you guys, eventually I think J&J will have a spot in the portfolio. Once I hit the age of like 40, I'm only 25, turning 26 this year, but there are certain stocks that I would want in the portfolio if I was looking for consistent dividend income, not even consistently increasing, just consistent income. If I was 40, 45 years old, I would have stocks like Walmart, or I do own Procter and Gamble, but and J&J would definitely be on that list of companies that I'd own as well, because I like J&J. I just prefer Pfizer right now because I feel like the dividend is going to grow a little bit more and it's cheaper, so I can get three or four shares of Pfizer for one share of J&J. And even though Pfizer's dividend might not grow as fast as Johnson & Johnson's, the premium that I have to pay for J&J, I think, so like if I get 4 shares of Pfizer, it pays 39 cents, right? If it grows its dividend by 2% versus 5 for J&J, if I can get 4x shares of Pfizer, I can get an 8% dividend increase for the same amount of money that I would be getting a 5% increase for J&J. So I can buy more, and with that bulk purchase, even though the dividend yield might grow slower, I can buy more so that lower year-over-year growth for Pfizer will compound at a better rate than I think J&J will. So long term, I like Pfizer a little bit better for my situation, but if I was like 20 years older, I would like Johnson & Johnson better. Next, we got Procter and Gamble, which I own. Another company for new investors to consider is a classic pick from the world of consumer staples. Procter and Gamble has been in business for 184 years. It's a family of brands including Pampers, Bounce, Tide, Bounty, Charmin, Old Spice, Pantene, Dawn, Swiffer, Crest, and Vicks, to name a few. So that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 names that you probably have in your house or have had in your house within the past month. It's crazy the amount of brands that they have. Like our previous stock, Procter & Gamble's also got a handful of companies that made it into a Dividend King list. The company has increased its dividend every year for more than 6 decades and is a Dividend King that yields 2.5%. Besides the great track record, the stable of household name brands has stimulated a balanced balance sheet growth through the pandemic, which is not surprising. The company marks its fiscal year a bit differently than other stocks. 2020 ended on June 30th. During the 12-month stretch, Procter and Gamble reported 5% net sales growth and earnings per share of 13%. The company has continued to report consistent figures of growth throughout 2021 during the first 3 quarters of this period, which ended on March 31st. Procter & Gamble reported a year-over-year sales increase of 9%, 8%, and 5% respectively. Moreover, except for a slight third-quarter sales decline in Procter & Gamble's baby, feminine, and family care products, all the company's core business segments marked sales increases for each of the 3 quarters of the year. The companies also continued to generate significant cash flow while faithfully fulfilling the dividend obligation to shareholders. It reported more than $4 billion in operating cash flow the third quarter alone, and paid out $5 billion to shareholders in dividends during that 3-month period. Procter and Gamble is also generating between 5 and 6% sales growth for its full year of 2021. If you're searching for a safe stock that can help you weather whatever storm might come in the market while helping you build a resilient portfolio and increasing your nest egg at the same time, Procter and Gamble is a stock to buy and hold for decades to come. I agree. Out of these two, Procter and Gamble by far is my favorite. I own it. I only own 1 share just because I wanted to initiate a position, and I always initiate really small positions. But I love Procter and Gamble. I use their products literally every day. We have to buy Pampers for my niece and nephew, baby wipes. I use Charmin and Old Spice, and my mom uses a Swiffer, and we use Vicks all the time. And I use Crest toothpaste. So I literally own Procter and Gamble because I use about at least 3 to 4 of their products every single day. That's one of the things too, since this is about newer investors. Keep in mind, guys, another really easy way to start finding stocks to buy is go in your bathroom and look at the toothpaste you use, the mouthwash, the soap and conditioner, the deodorant that you use. There are certain brands that you kind of pick every time you go to the store. You might not even realize that you do this. I always buy Crest toothpaste. I buy Old Spice deodorant. So I always get Tylenol when I'm at the store. Like, like there's certain things that you just buy. So the next time you go to the grocery store or go right now, go to your bathroom. First go to your bathroom and see what you buy, and then make a list of stuff that you buy when you go to the grocery store, and pay attention to the brands that you select and see if it stays consistent, because if it does, you should be buying those products because you're funding them anyway. So that's a little trick that I used when I started out investing myself. So guys, these were 2 unstoppable stocks for a market crash. Thank you guys so much for watching. Remember to hit the subscribe button when you do hit the bell notification so you don't miss any updates. I post news articles like this, stocks to watch. I post news articles and portfolio updates Monday through Friday. So I try to get 2 videos out to you guys every single day, every weekday, Monday through Friday. If you guys like the consistency on the channel, make sure you do hit the subscribe button. And when you do, hit the bell notification so you don't miss any updates, because like I said, post 2 videos and you don't want to miss a video. So thank you guys so much for watching. I'll see you guys with another list here soon. Take care.